Gartner here with Epic, and today we're going to get into a topic for business owners, and this is something near and dear to my heart. We're talking about what is a key man life insurance policy. So key man life insurance, right? This was a term, obviously insurance is an old product. And so a long time ago, it used to just be men insured, right? But key man is also referred to as key person, right? And so what we're looking at as business owners is insuring something that is really one of our most valuable assets, and that's our human capital. So what do I mean by that? You may have a key employee who's responsible for a good amount of your sales. You yourself may be a key employee to the business, right? And how are we ensuring that if something were to happen to that employee, we're able to replace the value of what they meant to this company? So oftentimes when we think about funding things, one of the easiest ways to create a fund is to create something called a sinking fund. Right? And what is a sinking fund? A sinking fund is just what it kind of sounds like. It's something that we're going to put money into, that it's for a cost that's out there in the future, but we really don't know how much we're going to need or what that cost really is. So we're just contributing to this on a month-by-month basis. The problem with using a sinking fund is it may take a long time for that to build up. And if we're talking about a key employee, we may not have the luxury of time for that account to build up in value. So when we think about a sinking fund and that not having enough time, well, life insurance could actually be a self-completing sinking fund, right? Because we're paying premiums in now for an assumed amount of money that we need. And the nice thing about life insurance is we need one premium payment to ensure that the coverage is in place. For you as a business owner, there's a number of different ways you can approach this. And oftentimes for startup businesses that don't have a lot of cash flow, we might simply be looking at a term policy to ensure the value of maybe the ownership. Maybe this key person in policy is part of a buy-sell agreement, which we can go into in later videos about what is a buy-sell agreement and how that affects your business. So term policy might be one of those options. Another option is to use a policy with high cash value from a dividend-paying life insurance company, right? That can create a pool of money, not just to ensure that key person, right, and ensure that value for your business, but also to have assets on the books for the business to be able to use. Before I dive too much into that, there's a link in the description below. Click that and you can get connected with a team member. So you came here to learn more about a key man life insurance policy. So let's dig a little deeper, right? We're just talking about using a high cash value dividend paying life insurance. This can be an asset on the books of the company to help ensure not just that key person and them leaving or something happening to them, but it can also be something that can be used for the business. You know, if funds get tighter, things come up, you have the ability to borrow or access that cash. One of the next things you want to be aware of is key people may change from time to time in your company. And so what you want to have is the ability to transfer that policy so that you don't lose the cash values in there. This is an option or a rider called transfer of insurability. It may require new underwriting for the new insured, but it's something that, you know, this business has already built up this policy. We don't want to lose those values that are in it. One of the other things I want to touch on is the fact that your key person life insurance policy, when you're putting this in place, can also be part of a non-qualified deferred compensation agreement. We can do another video on what non-qualified deferred compensation agreements are, but just think about this as a way to not only insure your business in the event that something happens to a key employee, but also as a way to attract new key employees and a way to retain them, right? Because you've spent so much time in training and bringing these people on board, we don't want to lose them to our competition just for a couple dollars. You know, you're asking the question about key person insurance, but one of the real things that I think is important is that a company have these on all of their key employees. And I'll give you an example that I've seen where somebody didn't have key person insurance, right? A successful architecture firm had 2 partners, and these partners didn't have life insurance in place on each other. So unfortunately, in the passing of one partner, this partnership now has a decedent spouse and a partner in place. And what really happened to this successful firm is that the decedent spouse wanted nothing to do with the business and had to be bought out of the company, right? And in the process of buying her out, because there were not the funds, because there was no key person insurance there, it actually put the business out of business. These are the types of things that we can help people avoid when doing proper planning. What I would suggest to you is if you're in the process of starting a business or you're researching these topics, click the link below and talk to a team member. They can help walk you through what are the right strategies for wherever you are in business today.